Financial explosion, banks sinking fast, silver becomes insane. Remember those toxic assets during the global financial crisis that nearly collapsed the global financial system? Well, they're back, and they're even bigger than before. Let's start. This is an article from Bloomberg that says, Bank of America's CEO says commercial real estate will be a slow burn. A slow burn, really? The article says, Bank of America's Chief Executive Officer Brian Moynihan said it'll take time for the banking industry to work through issues with commercial real estate loans after a New York regional lender alarmed investors with its exposure to troubled debt. Troubled debt is really putting it lightly. These loans are coming to mature, and they're going to hit everything in this economy hard. Now, the article continues, commercial real estate is a slow burn. It's a classic burn. A classic burn, Moynihan said in a Bloomberg television interview Tuesday from the bank's trading floor. The trading attitude, which is these assets have to move at a price tomorrow morning, isn't the way the banking system works. Now, throughout history, commercial real estate prices tend to rise or be rather stable. It's not often that we see valuations drop. We've not lived through this time period. We've not lived through this period where workers are not going to office buildings, building upon building with these empty offices. We've never lived through this. This is a new era. And the frightening part is that all of the toxic assets that have been created by the sector are about to blow up in our face. If there's ever a time to go into a hard asset that you hold in your hand, like silver, this is it. And especially looking at what's coming down the pike with this commercial real estate issue. It is so pressing. And it tells me that all these years that I've been, well, it's twofold. It's told me that all these years that I've been stacking silver, I feel like I've been in the right place. And along with that, it tells me that the past basically 2 years that I've been complaining about silver and its stagnant price, this makes me feel better about my decision about staying the course and staying strong on stacking silver. Now, the article continues. It says, last year was a bleak one across the banking industry. In the first half, dozens of regional lenders swooned and some collapsed as rising interest rates slashed the value of assets on their books, saddling U.S. banks with hundreds of billions of dollars of unrealized losses. Some lenders started raising the possibility of defaults on commercial real estate loans, and the problem has yet to subside. Certainly, it absolutely has yet to subside, with New York Community Bancorp getting a cash infusion this month amid property loan troubles of its own. A cash infusion is exactly what all of these regional banks are praying for. Now that the support has been pulled away from them as of last week, and they're left on their own to bite their nails and hope that something happens with an interest rate that will save them, they're absolutely hoping for a cash infusion. Now, by raising short-term interest rates and trying to avert the curve, what happens is banks are setting up enormous unrealized losses from not just their normal loan book, but also those treasury and mortgage-backed securities they bought at the bottom of the pandemic. They were so happy to get those, right? Back when the rates were near zero, some even lower. I mean, they were ecstatic to get those. Now, we should see if it truly is a soft landing period that we're in, this phrase that we've been hearing, if it truly is, we should see defaults go down as the economy rebounds. That we're not seeing that. That's what we should see. We can see from this article that New York Community Bancorp needed a cash infusion to get through its own struggles. So remember, the support for these banks, these regional banks, was pulled out last week. So these banks are left to fight for themselves. Really what's happening is that these issues are not getting better, but in fact, they're getting a whole lot worse. And when these commercial real estate loans come to mature as this year plays out and as 2025 starts, it's going to hit all parts of the economy. People will certainly be not able to reach for their credit card the way they have been and build up their own personal debt, which is an issue of its own. They won't be able to do that. We already see struggles with people getting by day to day and relying on those credit cards. Along with that is these regional banks are looked to for people to get loans from these banks and foster the economy. These regional banks are looked to for every entrepreneur. Go article. It says that you take a building and figure out what the state rental rolls are, and you refinance it, and that wipes out the equity. Sometimes it doesn't, but we're careful in how we underwrite as an industry. It says we're careful. Well, and now what we will see is that Wall Street is not going to be careful. What we see is that Wall Street is going to do what they always do, and that is they will take all these loans. They're about to mature, and they're going to package them into toxic assets and then unload them onto the investing public. If this sounds familiar to you, then it should. If this sounds like the global financial crisis, then you're correct. Here in this article by Bloomberg, we see exactly what these toxic assets will look like. The article says an obscure investment product used to finance risky real estate projects is facing unprecedented stresses as borrowers struggle to repay loans tied to commercial property ventures. Known as commercial real estate collateralized loan obligations, or CRE/CLOs, they bundle debt that would usually be seen as too speculative for conventional mortgage-backed securities into bonds of varying risk and return. So this is exactly what happened. This is what led up to the financial crisis. And you remember, as I'm showing you this silver on your screen, you remember that there was a big spike, not just in people going in and stacking silver, but there was a big, in the price, but there was a big spike in our community of silver stackers growing during that time, because people realized, like they are going to this year and the coming year, they're going to realize that this, what I'm holding in my hand, this silver, this is real money, not these games that we play with banks and regional banks. To say games really makes light of it, but truly, it's the fiat currency that we rely upon is so meaningless compared to something that you could hold in your hand. That's why I'm just a regular guy. I'm not an advisor. I'm just a guy who stacks silver, and this is why I'm always and continue to be so bullish. This shows you that this banking system we hear about in the mainstream media, this banking system that can handle all the stressors, this banking system is desperate and it is repeating mistakes. We should have all learned from history. Now, you remember back in the financial crisis, we had a lot of risky bad loans, and Wall Street needed to figure out a way to dump them onto unsuspecting investors around the world. That's how it started. They took those and they packaged them into good bonds that got their AAA rating from the rating agencies. They sold those until everything came down to the horrific end that we all experienced. We all lived through this. Now, this article continues. It says, the commercial real estate CLO market is the first shoe to drop in terms of defaults in the commercial real estate debt markets. It truly is. This is by Mark Neely, Director of Alternative Investments of Gen Trust, a money manager. He says the loans inside these CRE/CLOs tend to be for transitional properties. So the borrowers are counting on reselling them before the loan matures, but there's no way. Today, many borrowers can't sell properties for anywhere near where they bought them. There's just no way that's going to happen. This is really frustrating in two ways. First, it shows us that, yes, as silver stackers, as a community like ours that sees this going on and knows that we need to hold our wealth in our hands, it shows us that we made the right choice in two ways. First, we're stacking metals. And the second is that many of us, and there's always this constant narrative within our community of silver stackers, that Some believe that we should go all in on metals, silver and gold, and some believe we should go into real estate, right? Because that's another tangible, hard asset. This shows that really, this issue with commercial real estate and regional banks. This shows me that stacking silver and stacking gold has clearly been and will continue to be the right move. And I don't think ever in the narrative that we've heard in silver stacking, I don't think many people usually argue to go into investing in commercial real estate. People typically want to own land or own their own home, but it still shows me that after all these years, after all this time that I put into stacking silver, that as all of this unfolds in the next months and year or 18 months, this is really still absolutely the way to go. Stacking silver, I say, keep going all in. Silver is still at a price that we can reach, and it's absolutely the way to go.